Hello, everyone. Welcome. Thanks so much for joining us today. This is our webinar number 6 and the final of the year. And today's session is a very important one. We're going to be talking about royalties, royalty essential, the best practices for labels. We'll give it a little bit more time because there's more people joining. So while we settle in, feel free to say hello in the chat. Let us know where you're tuning from, where you're calling from, etc. So it's great to hear where everyone is based, what they're doing. Quick housekeeping before we start. This session is being recorded and we'll send you the replay afterwards with the presentation. So you don't need to take any notes. We'll send you that via email. And again, if you have any question, drop them in the chat. We'll leave some time, hopefully at the end, for Q&A. And yeah, before we start, I'm Zach, product marketing here at Revelator. For those who don't know Revelator, we are a global distribution music company working with label distributors and right holders around the world. We help them manage distribution, but also royalty accounting, rights management, analytics, and global payments. And today's topic, for me personally, is one of the most important topics in the music industry. I think often royalty operation can feel complex, but when the foundation are clear and getting them right is one of the most impactful ways a label can support its artists. And ultimately, whatever your role is in this business, we're all here to help artists build careers and making sure they're getting paid fairly and accurately and on time for their work. So today we are joined by two absolute experts in this field with decades of experience between them. Mark Spier, CEO and founder of Royalties Solution Corp and president of Memory Lane Music Group, and our own Valentina Nastase, Revelator's Director of Royalties and Revenue Operation. So I'm very excited that you're both on. And just before we start, here is a quick agenda of what you can expect from today's session. Essentially, we'll walk through the full royalty lifecycle. So the moments that matter the most are often caused by the biggest challenges, which is the foundation, getting your setup right before the revenue arrives, the production where most of the critical data is created, the processing, which is turning contract terms into accurate statement, and the last point, foresight, which is learning from the most common and costly mistakes. So before we jump in, let's Mark and Valentina introduce them quickly themselves. So why don't you start, Valentina, to introduce yourself briefly, and then we'll start with Mark later.
Hi, everyone. I'm Valentina. I'm Royalties and Revenue Director Operations at Revelator. I actually have a finance background. I got involved with the music industry at Revelator and it has been pretty interesting so far. I work every day closely with labels and distributors to help them simplify their royalties process and get their payouts running smoothly. I'm really happy to be here and very excited to share some practical tips that can make your royalties operations as easy as possible.
Thank you. Mark, if you can quickly introduce yourself.
Yes. So I'm Mark Spier. I'm the CEO and founder of Royalty Solutions Corp. Royalty Solutions Corp is a white label royalty administration service that works for record labels, distributors, music publishers. We also do royalty audits, valuations, registrations on the publishing side, basically any administration work that a record label and music publisher doesn't want to do. I'm also president of Memory Lane Music Group, which is a independent music publishing company that was founded by my grandfather in 1921, and we're one of the top 100 independent music publishers in the country, in the US. I've worked in this field, I'm going to say my whole life, but as my real job has been 23 years doing this, and I have a very good understanding of the royalty processing and administration required in the music industry.
Thank you. Well, amazing. I think what we can do is start with you, Mark, and start with the basics. Why is infrastructure the first step before a label processes royalties?
This is really the foundation of everything we're going to talk about today. Here's the reality. You can't manage what you can't measure. And if your royalty infrastructure isn't set up correctly, you don't actually know where you stand financially. Revenue coming in the door is not profit. Between the top line number and what you actually keep, there are obligations: artist royalties, producer points, featured artist splits, songwriter splits. And on the other side, you've got recoupable expenses: recording costs, mixing, mastering, video, marketing, that you're entitled to recover before participants get paid. Your infrastructure has to capture both sides: what you owe going out and what you are recouping coming in. The contracts that you sign with all these people are legal documents, but they're not accounting instructions. And don't ask a lawyer to give you the accounting information of a legal document, because they do not know. Someone has to translate those terms, both the royalty obligations and the recoupment rights, into something your system can actually calculate. Until that happens, you're guessing at the margins. When your infrastructure is right, you can answer the questions that matter. Is this release profitable? Have I recouped my investment? Is the deal structure working? That's what makes a label sustainable, not just processing royalties, but understanding what they mean for your business.
So essentially, what contract data needs to be captured before revenue hits the system?
This is where we get into the weeds a bit, but it's critical. There are specific sets of data points that must be extracted from every contract before any revenue touches your system. First, this trips up a lot of labels. You don't have to tell me. You need to understand the calculation methodology. Is it a PPD deal, a net receipts deal? Is it a hybrid? Most modern deals right now are actually hybrids. Even though it says it's PPD, net receipts work for streaming. Streaming is always net receipts, regardless of what the deal says and what anything else says. So this determines how every dollar gets calculated and it has to be right. Second, we talk about producer points, and specifically, how are they deducted? Are they taken from the artist share or paid separately by the label? Are they calculated on the same base as the artist royalty or a different base? And critically, are they paid from record one or only after the artist recoups? These details change the math significantly. Thirdly, other third-party obligations. Are there featured artists, sample clearances, union payments? What about mechanical royalties and paying the songwriters? There's a lot of people that get involved and want to get paid for a record. And then fourth, we talk about recoupment. What types of expenses are recoupable? Production costs, marketing, tour support. How are they applied? Some are 100%, some are 50%, some the label covers the whole thing. You need to know this before the money comes in, not after. And then the royalty rates by format and territory. Sometimes these contracts have deductions for foreign. Sometimes they have deductions if it's a discount record or things like that. And it's important to understand all the different terms that make up this contract.
And I think the question is, who's actually responsible for extracting and translating all that contract information and data into a system, or your system, whatever you use?
Well, this is where labels make a critical mistake. They assume that the accounting or royalty department can figure it out, and that doesn't work. Think about what we just covered. We talked about calculation methodology, producer points, third-party obligation, recoupment rules. That information lives in different places, and different people understand different pieces. Legal or business affairs has to interpret the contract language. Is it a PDP deal, net receipts, what deductions? Accounting can't answer these questions. Legal has to do it. A&R or someone from the creative side needs to know the context. Forget about, we talk about producer points, but sometimes we don't even know, the accounting or the royalty people don't even know that there are producers or third parties that participate. And having a verbal contract really doesn't cut it. Everything needs to be in writing and understanding. And then the finance or operations takes these data and translate it into some kind of logic that can go into a system to calculate it. So the way I like to work it is that there is a single point of contact. There is a person, and generally it's the person in the royalty department that accumulates this information, but it has to come from all the different sources or you're not going to have the correct answer.
And I think the question also is, when does all this needs to happen, and can labels actually build infrastructure gradually?
I get this question a lot, and I understand the reality. When you're starting out and you're signing artists, you're getting into the studio, getting releases out the door, royalty infrastructure is the last thing on anyone's mind. But here's the timing that matters. The core framework must exist before the first dollar revenue arrives, not before you sign an artist, but before you receive income. This gives you a window. You sign a deal, you go into production, you release the music, and then there's a lag before revenue starts flowing in from distributors. That window is when the infrastructure work has to happen. Calculation methodology and all the other recoupment rules, all extracted and built into your system. Because once revenue hits, you need to know where you stand. If the infrastructure isn't ready, you're receiving income, but you can't tell if you're profitable. You don't know who you owe, what's entitled to be recouped. You're sort of flying blind. And then you refine it over time. New deal types, new revenue streams, the system evolves, but the fundamentals tell you your true financial position, and that's before $1. You can't backfill financial clarity.
And I think to bounce off that, we wanted to talk about the second phase, which is about production. And that seems a little bit strange to talk about royalties until you realize that's where the most damage actually gets done. But can you explain that a bit further?
Production is actually the ideal to lock in the royalty data. Everyone involved is engaged, they're in the room, the details are current, and you have leverage to get the documentation signed. A lot of times we have producer agreements, but they're not signed or they're agreed, or again, we don't even know that producers exist. So when we talk about infrastructure, extracting the terms and building the logic, that's setting up the system. That's the framework, but the framework needs data. And that data needs to feed your royalty system. And most of it gets created or should be created during production. Think about what happens in that phase. You're booking studios, hiring engineers, bringing in collaborators, negotiating producer points, clearing samples. Every one of those decisions creates information for your royalty system, which you'll eventually need. Costs may be recoupable. Participants may have royalties. Splits need to be determined, writer splits at that time. The opportunity is that all of this information exists in real time. The producer who just agreed to 3 points, they're right there. You can document it, whether that's net or gross, whether it kicks in at record 1 or at recoupment. The featured artist just cut a verse. They're still excited about the project. That's when you get the paperwork signed, not 6 months later when they've moved on. Same with costs. When you're booking a $25,000 studio block, it takes 5 seconds to know which album and which track that applies to. The same information reconstructed 6 months later will not work. You will not remember what this expense was. The principle is simple. Capture data at the point of origin. Production is that point when most of what your royalty system needs is out there. So important.
And you mentioned leverage, that production is when you have the most. What specific documentation should label essentially be capturing while they still have it, that phase?
Well, let's talk about producer agreements and getting them fully executed. Not deal memos, not emails confirming points, signed contracts. A deal memo might say 3 points, but the full agreement specifies, again, whether it's net or gross, retroactive, whether they are responsible for the expenses of the artist. There's a lot of pieces in a producer contract that needs to be worked out. Featured artists work the same way. You need to know where they're going, whether they're a feature on that one track or are they a feature on the old. I've seen where a big name artist does a feature on a lesser known artist, and not only does he get points for that one track, but he gets points on the entire album because he's in essence making the artist. Again, we talked about songwriter splits. So we need to know who's responsible for mechanicals, Are there publishers that go with the writer splits? Are those writer mechanicals part of their producer money and artist money? Sometimes they're recoupable and all, and sometimes they're separate. You got to know this stuff. Important thing, and this is one of the main things that really bug everything, is that you got to get a W-9. If you're in the US, you got to get a W-9 in their payment instructions, because once someone gets paid, they're not coming back to you and will give you a W-9, because they don't expect to get paid and they don't respond. So when you have money for people, you get a W-9 done quickly. And again, also, the last piece is there are work for hire situations where people get fees and not royalty points or participation. So you need to make sure that that's documented and signed, so that if there is a producer that is getting a fee and no points, you need to do that, because once a record blows up, things go crazy. And the point is, everyone's in the room, get the paper signed. Birds.
We talk about documentation essentially for collaborators, but like you said, when things start to generate money, we have to talk about it. And I think the question becomes is, how should labels be tracking essentially production expenses so they can actually recoup them later?
So again, that's the same thing in terms of documentation and knowing things, right? First, you have to understand which are recoupable and which are not recoupable expenses. Every time you spend money, you need to document what that money is for. Is it a production cost? Is it food in the studio? There's all these different things. And we've experienced a lot of labels where they just give us their American Express bill and say, here are all the expenses. And it's like, we look at that and say, what do you want us to do with that? What are recoupable? What are marketing? What are production? Does this count towards the artist, or is it in the whole picture? And then again, it also goes to with the expenses to note the track that's involved with it. Because again, if you have a producer that's on just one track and the expenses of the production are recoupable against the producer, you need to know that those expenses are when you produce this track and not for the album as a whole. And the key is to keep things consistent across projects and making sure you got the right nomenclature and terms, right? So let me give you a specific example. Contract says 50% of video costs are recoupable. That's a clear term. But if you never track the video cost as a separate item, you can't apply the rule. You need to make sure you know exactly what it is, because you know that an artist or a producer are going to come back and fight you in the future. So the more you have documented and the more proof you have it, the easier it is to respond to an audit or an artist's questions. That's the key thing.
And essentially, what happens when labels do not capture this information during production and they're stuck playing catch up with the artist?
So when you try to play catch up, it generally takes you 10 times more time to do it, because number one, your memory fades, right? You gave this person for a particular expense that was supposed to be split between 2 albums, but that person left the company or just forgot. 6 months later, nobody knows why there's a $50,000 line item on the contract or on the statement. You make educated guesses, and that just causes problems. Again, documents get lost or they never get signed. A lot of times I mentioned this before, the lawyer sends out a producer agreement and it never gets signed, or it gets signed, but the lawyer never sends it to you, or you don't have it. It's crazy to want to try to reconstruct and remember things many months down in there. If you have a successful record and the money starts pouring in, now the artist and the producers want to get paid. And now you're under pressure to get these things done because they want their money. And all these factors fall in, and then under pressure, things don't get right. And it's scary what goes on. And again, when you're trying to do this and you're trying to reconstruct it, it takes hours to reconstruct it when it could take 5 minutes when you're in the studio. And when this happens, and the artist asks for money and your response is, well, you're not recouped. And then they say, well, how do you know that? Your answer is, I don't. And then the trust between you and the artist starts to go down. And it's not the right way to operate. And that 5 minutes that you could have taken up a year ago is now into a fire drill, and it's causing a lot of problems. So the whole key point is documentation, cost tracking, timing. It's not an administrative overhead when you're doing it in the beginning. It becomes a big giant task when you do it later in the process.
Absolutely. And I think ultimately transparency and clarity at this stage helps everyone, the artists, the labels that sign the recording or the song, and everyone is clearer and happy. There's no surprises down the line. But when revenue starts coming in, how do you essentially translate the contract terms into actual calculations?
Right. So this is where it all comes together, right? So now you've done this right. Your infrastructure is in place. Your production data is clean. You've released it. The money is actually coming in. Now what do I do? So the first step is, again, split up the revenue types, building what the contracts know, what every contract, a big spreadsheet works very well for each track. You list all the participants, their rates, the songwriters, and go from there. And it's just a whole thing of getting it all together. And then, of course, the spreadsheet of the expenses. And then you just sort of, now that you got everything, you can then work towards getting it into some sort of system. You've organized all your inputs and all the numbers, and great, I got everything. Now what do I do? Right? And this is where the next step comes in.
So we talked about what needs to happen, translating contracts, mapping the revenue, tracking the recoupment. So the last piece is, how do labels actually execute all of this, and can you do it manually? Like, how does that work?
So the answer is you could do it manually. And when I mean manually, I mean in spreadsheets, but you really shouldn't. You really should. Let's be realistic. If you're a small label with a handful of artists, simple deal structure, low transaction value, a spreadsheet can work. But the moment you add complexity, multiple producers, different calculation methodology, recoupments across releases, spreadsheets break down very fast. You're one formula error away from a serious problem, and you have no audit trail. For most labels, you need royalty software. But I want to be direct. Software doesn't solve bad data. If you process bad data faster, it just processes bad data faster. Everything we've covered in sections 1 and 2 has to be right before the software can help you. There's a lot of royalty software options on the market, and they're not all built the same. But what matters most is calculation flexibility. Can the system handle your deal structures? Does it deal with different producer bases? Most software comes with templates that work for generic deals, but your catalog probably has unusual arrangements that doesn't fit standard templates. Can your system handle that actual complexity? Rights holders portals. Sometimes it's nice to have a portal in which your clients can actually see the information, track their statements, balances. Showing them these things adds a lot of, a word I don't like, but transparency, so that they could see what's going on. You could also talk about audit and integration. What is there that I could do when I have a question? How can I track back where this money came from, or why these expenses are there? So when you do a data entry, it causes problems. And part of the other thing is how you have in your royalty system. Does it connect to your payment system? Does it connect to your accounting system? These are, again, all different factors when deciding of a software. Now, I'd be remiss if I didn't mention that this is Revelator that is sponsoring this webinar. And there's a reason for that. Their platform was built specifically for independent labels and distributors, handling flexible deal structures, rights holders, portals, payment processing. If you're in your market, you're worth a serious look. And let me just say, there are other platforms that do other things, and each platform has their own holes in it and things that are doing things. So regardless of the platform, these evaluations criteria apply. So now I'm going to let Valentino explain a little bit about Revelator here.
Thank you very much, Mark. I completely agree with everything you said so far. Capturing the right data up front is fundamental. Royalty accounting and operations are inherently complex, and no software can compensate for inaccurate data or even incomplete inputs. However, with the right framework, any label can build a workflow that is functional, transparent, a word that you don't like, but it's applicable in this case, and scalable. At Revelator, we see this firsthand. We support distributors, labels, and artists every month with both distribution and royalties operations, and the challenges are remarkably consistent. High data volumes, diverse deal structures, and the need for precise and verifiable calculations. In my opinion, as somebody that loves to use spreadsheets and Excel, they simply don't scale to meet the level of complexity unless they are maintained by an expert. When labels are evaluating platforms to manage the royalties revenue, I think the structure and the flexibility of the contract module is the center of the decision making. Contract logic is what determines how every dollar earned by your catalog flows between your company and your collaborators. Is a strong contract framework must at least support contract terms, collaborators, and contract assets. I'm gonna speak a little about each of them. The terms refer to your distribution fee or your rev share before the royalties are allocated to your collaborators. A robust system should allow you to define differentiated rates across DSPs. You can have different rates from YouTube to Spotify and so on, between services, formats, and even territories, as you mentioned, with the territories that might have tax withhold. Another key part are collaborators. We call them at Revelator payees. After the terms are applied, revenue must be calculated accurately among participating payees according to their contractual percentages. The platform should support any number of payees, each with their own structure. The last but not least thing that that the contract structure must include is the ability to define the contract, what the contract actually covers. It can be an account level contract, a label level contract, artist release, and even track level contract. Flexibility here ensures that the contract logic aligns with basically real world catalog structures. In essence, contracts are the engine of the royalties processing. If a software can model your actual data complexity, and if the underlying data is accurate, you can trust the calculation that follow. This is what enables labels to move beyond manual work and establish royalty pipeline that is consistent, auditable, and also build growth.
You make an important point about the contract flexibility. I'll add one thing from the auditor perspective. Whatever platform you choose, make sure you can export the calculation logic into a format that's defensible. When an auditor asks, show me how you calculated this, you need to produce documentation that traces from the contract terms through to the payment. If the system is a black box, you are disadvantaged in any dispute.
Absolutely. And I guess once you essentially have all your ducks in a row, you've selected your software, revenue starts flowing in, everyone is happy, money's coming in. So walk us through what actually happens. How does the money move from distributor reports to accurate royalty calculations?
Well, at this stage, you've established your infrastructure, captured the necessary production metadata, and also selected the right software. Now the real operational and nitty-gritty work begins. Because revenue starts coming in, then the question becomes, how do you turn raw distributor royalties reports into accurate auditable royalty payouts? Let me walk you through the process with an emphasis on how we do it at Revelator. The first step is consolidating the multiple revenue sources. Labels today receive income from a wide range of partners, DSPs like Spotify, Apple, Amazon, YouTube, also physical distributors, sync agencies, and also direct licensing agreements. Each of them, and I deal with this every day, Each of them deliver data in different formats with their own field structure and even sometimes schedules. The first operational step is to centralize all this into your royalty system. It's very important to take into consideration that a reliable platform must be able to ingest diverse reports, diverse types, extensions, and also stay aligned with the evolving DSP's reporting standards. It's very often that the DSPs change the report format, exclude columns, sometimes without notifying us. So it's important that you check this before you start collaborating with a platform. And now once the data is imported, the system standardizes it. It's mapping the SRCs, UPCs, the production lines, the territories, the revenue types, currencies, and more to consistent internal format. This normalization is essential. Without it, your calculation engine simply cannot apply the contracts accurately, the contract that we spoke before. So at this point, everything is in your system, but now the finance part begins. You want to reconcile the usage reports from the DSPs with your actual payments. It's possible that at this point you might need to add FX rates, you might need to add tax withholding, or even some adjustments. For instance, if you work with Merlin, there is an Merlin admin fee that you need to adjust. This reconciliation ensures that all the data revenue is calculated from the correct net amount. The next step is an industry black hole, I could say, and is handling unmatched lines. Unfortunately, everybody has to deal with this. Given the complexity of the DSP reports, mismatches between the royalties reports and your metadata is unfortunately inevitable. This could come from incorrect ISRCs, renamed tracks, metadata inconsistencies in general. In the Revelator platform, unmatched lines can be matched or even separated to a dedicated report for later reconciliation. This report will inherit the initial FX rate, tax, and even adjustment. It's basically adding some sort of a prorate. The goal of this step is simple: to have only clean, actionable data that moves forward to the next step, which is the approval of the revenue reports. Now your revenue reports are approved, you don't have unmatched lines anymore, and you could start doing a royalty run, or basically applying the contractual logic. However, before the calculations run, all contracts must be fully configured. They should be configured at this point, but it's good to have even another check. It's important for the terms, splits, recoupment rules to be up to date. Any interim transactions such as advances, expenses, refunds must be booked on the pay's account. Without a complete contract setup, even the perfect royalties processing system can't produce accurate results. Also, Mark emphasized on that, and I completely subscribe to this. Now, the fun part starts once the revenue, applying contractual logic. Once the revenue reports are approved and the contracts are checked and validated, a royalty run can be created in which the royalty engine basically applies the contract logic on each line of the revenue reports from the DSP. This is when the system transforms raw usage data and splits them into reports for each pay. So now statements are generated. As the system completes all the revenue calculations, the platform generates detailed royalty statements for each payee or collaborator. These statements break down earnings by track and release, display all the applied splits, which is extremely important if you want to audit a statement, and include any relevant expenses, taxes, or withholding, including your distribution fee, your cut. This involves, before releasing the statement, this is actually extremely important, a thorough quality review is essential. This involves checking for unusual variances. Let's say a pay has, 100% increase, and you would like to understand why. Validated holding rules, just to have a rough idea of your distribution fee, if it's a lot higher than it's supposed to be, confirming recoupment behavior, and also ensuring that there is no unallocated revenue remaining. At this point, after the previously mentioned verification, the statement could be released. In Revelator platform statement, in the Revelator platform, the statements become visible to the payees only upon approval. confirming that the organization has reviewed and validated all the results before they are sent to the payees. Because once they do the payees, it's very difficult to come back and make corrections, and also it's not really a good look, to be frank. The last step is the payout of the royalties, basically. Finally, the last step. The royalties operation cycle should end with the royalties payouts. So you approve the statements, now you pay them. As the statements are approved, the pay balances also update automatically. Through Revelator, payments can be executed using payment providers, payment integrations. We currently have Tipalti and PayPal. The advantage of this is that the payment transaction is created automatically and the balances of your payees is up to date all the time. However, if you'd like to pay your balances externally, as an example, through your bank account, you can download the balances and after that import a list with the payment transactions. I know it's a lot, but ultimately royalty processing is not a single action, it's a pipeline. You need rules, you need schedules, you need to be disciplined. But to summarize, revenue reports are ingested, they are reconciled against the payment, they are allocated through a royalty run. This is how we do it at Revelator. The statements that are generated from the royalty run are reviewed, approved, and finally paid out. It's very important to mention that each phase depends on the integrity of the previous one. When executed correctly, this pipeline transforms complex data, and it's complex, regardless of the size of a label of a business, into accurate, transparent royalty payments for every payee and collaborator. So I think I hope I covered it all.
Yeah, you described it perfectly. I just want to add two sort of catch problems that sort of compound. The first thing is reconciliation before calculation. So after you've ingested all the royalties and before you do the run, you mentioned this, you need to compare what the revenue is showing in the royalty system compared to what it's showing in your accounting. If Spotify sent you $100,000, but you only ingested 92,000, well, what happened to the 8,000? You can't. And what's worse is if it goes the other way. If Spotify says they paid you 92,000, but you processed 100,000, that's a big problem. And then the second one, which we like to do, is you need to have a sort of, I want to say, waiting period, a cooling off period between the time you created the statements and the time you sent out the payments. This gives you a chance to catch errors and figure out the right thing, because the most important thing is you don't want to send out wrong information. Whether you underpay them or overpay them, it's definitely a problem to send out wrong statements. So it's very important to check. Another thing that we do here is we call it a money out report. So we take in all the money that we've imported into the system, and it says we collected $200,000 for this period, and then we look at what we paid out or what it calculated. And if it calculated 30,000, well, that might be right or wrong. But if it calculates more than what you paid or gives you no money, no profit, then you have to look and see why the calculations are wrong, because this is the whole key point. You don't want to pay out the wrong amount of money.
I think everyone will probably absolutely agree with this statement. But so essentially, before statements go out, what exactly does the review and reconciliation process look like? Who actually needs to sign this off?
Right. So I just talked about that, right? Nothing should go out the door before it's being thoroughly reviewed. Again, once it's in the statement, once the audit sees something, you can't take it back. You can issue corrections, you can apologize, but the credibility damage is done. And this is not the most industry that's most upfront with a lot of their audits and things like that. So it's very important to do it right. A very key point that I always like to stress, just because the software produced a statement doesn't mean it's right. You could put in a wrong rate, you could put in wrong recoupments. The statement is garbage out. But if it's garbage, it still will be in a nice formatted PDF that could look like that. So this is first, reconciliation is important, right? I talk about different, we'll say, eye tests, or just by looking at it. And I think we mentioned this before. artist earned $50,000 one quarter, and then the next quarter it's $5,000. Well, that might be right, but it needs to be examined, and then you need to understand it, because your artist is going to ask you, why did my numbers go down? Understand what's in the calculations. What are how the expenses checked out, right? Check out all the complex deals. Make sure that producers are being deducted from the artist royalty, or they're not, depending on what it is. And I just said, royalties in versus royalties out is very important. You need to understand how much money you received, and you don't want to really pay out more than you have to, because that dooms labels. And keeping track of recoupment also. And then document everything you do. When there's something anomaly, or there's something that's not right, write it down. Keep track of it, because again, someone in the future is going to question this, and memory fades. Always keep everything documented. I can't stress that too much. And those extra days of between statement and sending it out can mean hours and hours of savings down the road.
True. From my perspective, before statements are released, there should be a defined review framework. One good practice is to establish rules for what warrants a second look. For example, like Mark mentioned, if a collaborator or payee whose earning increased by a certain percentage compared to the previous period, you would like to understand what is the source of this change. Did the artist release new content? Does the current statement include additional DSPs from the previous period? Are there variances that indicate potential issues like artificial streaming? Also, in addition to these variance checks, it would be helpful to build time into the monthly schedule for such exceptions. Of course, depending on your monthly royalty schedules, allocating 1 or 2 business days before for unexpected issues, whether report corrections, metadata fixes, or contract adjustments, allows you to stay on the timeline. And in the best case scenario, you could do payouts earlier than expected, and your artists and your clients would be very happy.
I just want to add just one thing into your thing.
Please.
We see a lot of deductions for fraudulent streams, and that causes sometimes the numbers to be out of whack, because Spotify will do a year's worth of adjustments for fraudulent streams, and then the numbers change. So it's important to understand what's in the DSP reports.
100%. I totally agree with that. And I think what's important is also, we've covered what labels should do, the infrastructure, the production data, the revenue processing. But I think it's important to emphasize what happens when they don't. And maybe you have example of the most expensive mistakes that you've seen because of this. If you can give us, I don't know, an example of.
Well, everything we've covered in the first 3 sections: infrastructure, production, data capture, revenue processing, discipline. When labels skip any of these steps or do them halfway or half-ass, the compounds the mistakes, and they get expensive. The first problem is treating all revenue as just money in my bank account. You need to figure out where the revenue is coming from, what artist, so that you have an understanding of whether it's streaming, whether it's physical, whether it's sync, and knowing that the rates, right? This sort of ties back directly to what we covered in section 1. If you didn't extract the calculation methodology from your contracts, you can't apply it correctly. Failing to track recoupable costs. Again, another situation is like, and we get this problem, we see the solution all the time, where you do the calculation for a label and it says, oh, I owe this artist $40,000. And the label owner goes, well, that's not right. I spent all this money on marketing. But he doesn't tell you, he doesn't have it documented. So then it becomes a fire drill to say, oh, now I got to fix this, because in all honesty, I don't want to pay the royalties out to somebody that they're not deserved. Then good luck trying to get it back. Again, we talked about producers, the gross versus net, and when they get paid sometimes, and what expenses get deducted. These are things that mess up the flow of things. Keeping track of contracts and amendments to contracts. and what the contract says. The biggest legal word or legal phrase that always gets us in contracts and people in contracts is that there's different clauses, and it says, notwithstanding the above, and basically says, well, we put everything above here, but it doesn't matter because this one overwrites everything that we put in the previous one. And understanding that is important. And again, these are the things that we see going on. The common thread here is that every one of these mistakes traces back to something we covered in the first three sections. Infrastructure not set up correctly, production data not captured, revenue processing without proper controls. These aren't random errors. They're predictable, there's consequences, and we know what happens. You skip one of these steps or you try to do it later and you can't do it right. It just takes too long to get it right.
It's true, Mark did cover most of the costly mistakes. I helped a lot of clients through our support, and I do have some honorable mentions. I think that one of the most expensive errors, I would say, is that labels do not fully understand the capabilities of the royalty management platform that they use, which could make them have inefficient workflows. They work more than they should. Another would be setting up the wrong bank account, which can delay payments from the DSPs and also payments to their clients. The last one that I'd like to mention, which I think it's extremely important, would be not being prepared for team changes. This can generate gaps and errors in the royalty operations process. Each of these issues can be both costly and time-consuming to resolve. However, working with a knowledgeable team that can provide guidance and solutions can make navigating through these challenges a lot smoother.
And I can't emphasize that more. We've audited labels where the entire institutional knowledge had walked out the door with one person. No documentation, no process notes. Just Sarah knew how that worked. Succession planning isn't just an HR concept. It applies to royalty operation. Document your processes, cross-train, never let critical knowledge live in one person's head.
I think that's a perfect example. And I think that applies for other departments too, but obviously this is a very costly one when everything rely on one person and they just leave the company and it becomes
Let's skip the next question since we're running low on time and we want to get some questions, right?
Sure.
Oh, in-source, right?
I think we can touch on quickly on that point where I guess the question is, when does it make sense for a label to manage royalty in-house versus outsourcing? I think a lot of people usually have this question, and I guess every business is different, but it'd be good to get a better understanding on how to make this decision.
Right. So we identified the warning signs, what could go wrong. Now you need to decide how you're going to fix it and who's going to run with it forward. And there is no one size fit all answer. Again, we talked about small labels. Most of the deals follow a strong internal operations person who actually understands royalties, not someone who's figuring it out. Someone who knows the difference of PPD and nets and can deal with the low transaction. When volume exceeds your internal capacity, and when I don't even want to say internal capacity. If you're the label head and you're doing the royalties, that doesn't make sense because that's not your skill. Your skill is running a label, finding talent, and making the talent successful. Doing royalties is something that you don't want to do, you're not good at, and not your job function. I believe that everyone should do what they do best. And an outsourcing company will concentrate on the royalties and get your royalty statements done the way you want them to be done. And there's also hybrid models. There's models where the label does some of the work and then you outsource some of the other work, or you want to do the payments yourself and the payments, or the outsourcer could do the payment. There's a lot of different things. It's really has to do with your internal capability and your bandwidth and what you want to spend your time doing most.
Absolutely. I think ultimately not everyone has the time to do it well. Not everyone has the knowledge or the expertise to do this. So these are important questions to ask yourself. do we have the right team? Do we have the right solution to handle it properly? And ultimately, if you're not doing your royalties right, you are doomed to fail, because the job of a label is making sure that royalties are paid properly with the proper infrastructure and on time. So I think this is a very important point. I know we're running a little bit out of time, so I'm going to look at any questions if we have any, and I can see some in just, okay. So first question.
Just put it in the chat, Eric. I see you raise your hand. Just put the question in the chat.
Are there any label using Revelator as their sole royalty platform? How is mechanical reporting handled in Revelator? That's from Jacob.
That's as you, Valentino.
Yes, there are labels. I don't know if I can share the name of the labels, but we do, yes.
But mechanical royalties are not something that you handle very well, right?
Sorry,
yes.
Mechanical royalties,
Right.
I did not understand correctly.
Right, so that when we went into that question about platformed what, certain platforms do mechanical royalties, others do not. So that's where you have to measure out what you need to be done and go there. I could provide you a list, but I don't think it's appropriate on a Revelator call to provide you with their competitors.
Another question is, what about the neighboring rights?
Well, neighboring rights, we're not talking about collecting royalties. We're only talking about processing royalties. So neighboring rights are like any other source of income. So the income comes in, we could process it. How to register the neighboring rights is really not a royalty framework type of discussion.
And Eric is asking, what are your thoughts on reported settlement income and the methodologies which are applied for the distribution on
Well,
income?
you know what? Why don't you unmute him, because I think you're not reading his question. He's winging his hands.
How do I unmute you? I think I need to.
I
don't actually know. I'm sorry. I don't know.
You can unmute
Can you
Eric.
unmute yourself, Eric? No, and I can't do it because I think unless I make you a co-host.
No.
I can try that. Let's try that. No.
And the methodology which apply the distribution on income separate from breakage.
Sorry, Eric. We
can't hear you.
All right, no worries. So did you see the question, Mark?
Thoughts on reported settlement income and the methodologies which are applied. I know it's a typo. You're going to type it again. I think you're talking a lot about physical sales, right? Wait for him. But physical sales are a lot of energy in physical sales. No, he can't. We'll give you an email, Eric, and or you can talk. We'll talk later.
That's a good point. Anyone that has question afterwards, really feel free to send them directly to us. We can pass on to Mark. We'd be happy to answer them afterwards. I think, me personally, I think there's a lot of questions in general. And your email is marketing@revelator.com. We can either direct them to Mark or Valentina, depending on what you're asking. But I think ultimately, there's a lot of question around royalties, and education is really important to make sure that whoever is looking after that side of the business really understand all the complexity around this subject, which again, as I said in the intro, I think is probably the most important part of running a music business. And a label is having a very solid royalty accounting in place. I think, just to wrap it up, I also think that things are changing constantly. I think, Valentina, you touched on that. DSPs are changing their reporting. We are entering a very interesting phase in the industry with AI, new formats. So having solution and framework in place that really can handle these changes is crucial. And I think, again, the education part and expertise goes without saying. But I think, to conclude, this for me was a lot of information, and I'm sure for the audience too. So what we'll do, we send an email with a recap, with a document that Mark put together, a fantastic document to really break this down in a digestible way that you can refer to look at for that. I guess, unless anyone has any other question, I want to say big thank you to Mark and Valentina for doing this. It was really valuable, and I think there's a lot to take from it.
I'm just going to put my email address in there. If
Sure.
might as well have a shameless plug of my services.
Absolutely,
If anyone
yeah.
is interested about doing royalties and outsourcing it, or needing a help, or audits, or even consulting work. We work with people that do it themselves but don't know what they're doing. So we help them.
Absolutely. And I think you've explained that very well, is having expertise is non-negotiable. You need experts, you need knowledge, and you need the software solution too. But I think it's very important to have both. So,
and I found that there are very few people that start a label, run a label, work in a label that like to open up a spreadsheet. And they don't even know sometimes what a spreadsheet is. So it's a challenge sometimes.
Absolutely. And I know we all have stories of people doing contract on a napkin or a handshake, which hopefully doesn't exist as much today, but it's still unfortunate reality. So get the paperwork, get the expertise, get the contracts in place, and then hopefully things will run better. But again, thank you for everyone joining us. It's been a pleasure. Just to give you a bit of more info, we are going to be running webinars next year. We look out for that. We'll be sending an email for the next one. But again, thank you so much for joining, and feel free to send any question afterwards. But enjoy your day, and see you soon.
So long.
Thank you.